Hi, my name is Michael Bias. I'm the founder of Spark Bookkeeping LLC, where we're drilling down your books so you can drill up your profits. If you are unaware, I help construction contractors with all things accounting, and I am able to talk about this because I am a licensed CPA and I have helped hundreds of individuals and businesses with accounting and tax related issues. And if you aren't a construction contractor, I do talk about general business tax and accounting things. And I also sometimes talk about individual accounting and tax things because, they all apply. If you're a construction contractor, you normally own a business and you normally do your own taxes because you're an individual. So I make these for everybody. This video today is actually going to be very contractor specific. Today, I have a special story for you on how one pool construction contractor in California was found liable for use tax on $2 million worth of purchases. And I'm going to go over how you can avoid this and how you won't get caught with such a large tax bill. Also, I should tell you that this story is based in California. I am also based in California, so these are based on California state laws. And I will have references to those, but this may not apply if you are in a different state in California. We're going to talk about the exact scenario that happened with this pool construction contractor. We're going to talk about how to deal with use tax for materials versus fixtures, machineries, and equipment. And then we are also going to talk about how different type of construction contracts can affect how much use tax you need to charge and when you need to charge that use tax. All right, so this case was the appeal of Addison Pools Inc. here in the state of California. So what happened was this pool builder was buying materials from a wholesaler, and this wholesaler wasn't charging them sales tax. And that is totally okay. If the wholesaler gets a certain certificate, they can not charge sales tax to the contractor. But the contractor now has a responsibility to charge sales tax / use tax. They're kind of the same thing. It just depends on the scenario which you're using them, and I'll go over that. But anyways, they were charged this use. They were supposed to charge this use tax, and because they didn't, they had to go to court and fight it, and then they were actually found liable that they should have charged use tax on over $2 million of purchases. And now they're going to have to fork out that sales tax that they would have passed on to their customers. Now they're responsible for it. Now, don't be worried if you aren't charging use tax in some of your contracts. If you pay sales tax when you purchase the materials, you're not going to have to charge use tax when you finish the project and give them their finished, building, deck, whatever it might be. But if you do buy these materials ex tax, which means you're not paying sales tax when you purchase the materials, you need to charge the use tax. So it needs to be paid somewhere. They just don't want you to double pay it. So if you pay sales tax when you buy the material, you don't have to charge use tax when you sell the material or use it in your project. But if you're buying it non-tax, ex tax, you don't pay sales tax when you purchase the materials, then you have to charge use tax when you do use the materials. Another thing to note is that this taxpayer did take this to the Court of Appeals, Tax Court of Appeals, because they believe that this was wrong what the state of California was trying to charge them. And so they took it to the court and they said, hey, we actually did pay sales tax on a lot of those purchases, right? But when the California Department of Tax and Fee Administration asked them to present these invoices, they ended up not presenting any. So either they didn't have good records and they didn't keep any of their invoices, or they really didn't pay sales tax on any of the materials. Either one could be the case, but just know you want to keep good records. And if you don't pay sales tax on your materials, you want to charge use tax. All right, so you can avoid this. Let's do a brief overview of how use tax is calculated, depending on if it's materials versus if it's fixtures, machineries, and equipment. You are liable for use tax when material has been delivered for the fulfillment in the use of a construction contract, which means basically that you have delivered it to the job site and it's ready to be used to build your deck, build the house, whatever project you're working on. Now, once it's ready to be used, it is your responsibility to pay use tax on it, and you will need to report it on the return, the use tax return. Normally this is quarterly. So at the end of the quarter, you will have to report it. You can't wait for the contract to be finished or the job to be finished. If you're using it, you have a long project, maybe a year-long project, and you're using it in one quarter, you will have to report the use tax for that quarter. Same thing applies if you are purchasing these materials, not paying sales tax, and then you don't use it in the construction, but you maybe sell it to a subcontractor or a client. You will then have to charge sales tax on that material that wasn't paid when you bought it. The sales tax wasn't paid. Also, if you purchase material outside of California and then you bring it inside to California, use tax is owed once it arrives in California. For the fixtures, machineries, and equipment, this is if you are buying a refrigerator or any other type of equipment. It could be machinery if you're doing a commercial build, things like that. The use tax or the sales tax, depending if you're selling it separately or if you're putting it as part of a complete project to maybe build out a commercial space, maybe a restaurant or things like that, you have to pay the tax when you install the equipment and it's ready to go, or when the sale is complete, which California considers it when the thing is installed. Material includes lumber, asphalt, bricks, carpeting, windows, roofing, etc. Fixtures include air conditioners, burglary alarms, elevators, things like that. And if you want to learn more about this, you could check out California Code of Regulations, section 1521. There are many different subsections to this. It goes all over the material, fixtures, and provides a long list for you to check out if you want to see specifically for your business what is included. And now we're going to talk about the type of construction contract you're using. So if you're using the lump sum contract method, which you include everything into one price, the tax you have to charge on the fixtures is going to be the cost of the fixture to you, the business owner. So if you purchase the equipment, the fixture for $5,000, you only need to charge tax on the $5,000, even if you are upcharging it. So you are charging them maybe $7,000, $6,000, so that $1,000, $2,000 is your profit on that fixture. You only have to charge the cost of the fixture in the lump sum contract method. All right, that's all I have for today. Hopefully you don't make this mistake and get found liable for $2 million in purchases. I make these videos to help you guys out. So if you have any more questions, go ahead and drop a comment. Let me know. Feel free to message me. You could definitely book a call. I'll have my scheduling link in the description. Thanks.